Hi friends, in this video I want to share with you 3 stocks that have seen reasonable correction in the last few days, and more importantly the valuation of these 3 stocks is looking very lucrative because from a PE perspective they are trading much lower than the industry average. Without wasting even a single second, I want to straight jump into the 3 stocks. So the stock number 1 is REC Limited. Have a look at my screen and you will see that in the last few weeks the stock made a high of 509 rupees. Right now the stock is trading at around 444. It's a correction of almost 12 to 13%. REC Limited being a large cap stock, 12 to 13% correction is a reasonable correction. Now the immediate question we should have in our mind is that is there something wrong fundamentally with this stock? Is that the reason why the stock is correcting? Let's go and find out. So if you look at my screen, you will see the loan sanctions because REC is a company that provides loan to companies that are operating in the power sector. If you look at the loan sanctions here, the December 2023 quarter was the highest ever quarterly sanctions that they did, which was 1,32,000 crore rupees. So from a loan sanctions perspective, it looks honky-dory to me. The second natural question will come here, Rahul, that they have sanctioned, they have approved the loans, but how much of these loans actually they have given out? Because it is important that we understand loan disbursements and loan sanctions are two different things. You can approve a lot of loans, but you might not disburse these loans. So let's have a look at that number as well. So December 2023 again remains the highest ever quarterly disbursements quarter because they disbursed close to 46,000 crores worth rupees loan. So I see no issues whatsoever in the disbursements as well. Rahul, this might just be one single quarter. What about their loan book? Excellent question to think about. So if I bring you the outstanding loans or their loan book, you will notice that their loan book has grown at a healthy rate of 18% year on year. So the loan book is growing overall. More importantly, if you notice their renewable loan book, you will quickly notice that from March 2022, that loan book has grown from around 19,000 crores to 33,000 crore, almost 70 to 80% appreciation in the renewable sector, which is going to be the buzzing sector in the next 3 to 4 years. Also, you will note that 90% of their loan book is given to the state companies, not the private companies. And that means that this loan are going to be recoverable irrespectively because it's not given to the private corporates. And that brings me to very, very important parameter, which is their bad loans or NPAs. And have a look at my screen, you will see that their asset quality has been improving quarter on quarter and it is standing at 2.78% from a gross NPA perspective, and from a net perspective it is 0.82%. It has been gradually coming down, which is an excellent sign from an asset quality perspective. Rahul, what about the profitability? Okay, let's have a look at the profitability and you will quickly note that their net profits have grown up by 24% year on year as of December 2023. Their income is growing, their net worth is growing. From every aspect you see fundamentally the company is showing right vitals in my view. Now the natural question here is, Rahul, then why the stock price is correcting? For that, my simple theory here is that in the last 1 year, the stock has given 250% returns. And investors who are sitting on such huge profits are likely to cut positions at some point in time. They're likely to book the profits and potentially that is what is happening. And the stock has started to move sideways right now. Can this stock go back to 500 rupees level? It is entirely possible, or it may remain under pressure for few more weeks or months as it's right now moving to the sideways. But the important support you will see here is at around 425 rupees. Here on 28th of February it took. Again, it took a support at 423 on 20th of March. And one more time around 19th of April, the stock took a support at 425 rupees level. It may continue to move sideways, but in my view, this has a lot of potential because the valuations are looking good. The fundamentals are looking good. But please do not take this as a stock recommendation. I have done the analysis for you. And if you like this sort of analysis, hit the like button. Let me know in the comments a simple thank you. And you can also consider subscribing to my YouTube member community because I share in-depth analysis of various stocks and mutual funds and many other assets. Let's move to stock number 2, which is Hero MotoCorp. Have a look at my screen and you will see that in the last few weeks, Hero MotoCorp actually made a high of 4900 roughly. And right now it is trading at 4440, which is a correction of almost 10%. More importantly, if you look at the PE ratio and PB ratio of Hero MotoCorp, have a look at my screen and you will see that Hero MotoCorp's PE is at around 23 right now, while the industry PE is at around 57. So it is almost half the PE of the industry. If you look at the PB ratio as well, 5 versus 7.79. So it is looking really, really good from a PE as well as PB perspective. Now, fundamentally, if I show you the data in December 2023 quarter, the company recorded a PAT, which is the profit after tax growth of 51%. Tell me how many large cap stocks are recording a profit growth rate of 51%. there are only very few, hardly any stocks that are trading at a PE which is 50% of the industry, while the profit growth is at 51%. Now recently, Economic Times published a very good article on Hero MotoCorp. I'll give you the link of that article. Please go and read it. It will only take 1 to 2 minutes of your time, but there are key conclusions from that article. Number one is the motorcycle profitability of Hero MotoCorp has gone up to 16%, which is a level that used to be in 2019. And what is driving this profitability? Have a look at my screen and you will see it is the premiumization, because back in 2020 they only used to have 4 motorcycles in the premium segment. Right now in 2024 they now have 7 models, and by 2027 they plan to launch a lot of models in the premium segment, which is sports, adventure, etc. Rahul, how do we know that the growth is coming in the premium segment? Have a look at my screen and you will see Harley Davidson X440. The data speaks about itself. From October 23 to December 23, the volumes have doubled. In fact, the company wants to ramp up the production and the supply chain to be able to cater to 10,000 per month. Why company plans to do that? Mainly because they are sitting at an order book of 30,000 already and they are not able to deliver it. My point is simple, that company is moving forward, company is growing into motorcycle sector, into the premium segment, and also the profitability in the premium segment is relatively higher as compared to the normal motorcycles. The second key point I also like about this company is that the company is putting 600 crore rupees of capex into parts, accessories and merchandising business, which is the PAM business, and they want to take this business to 10,000 crore plus, because that business is also growing at a very good rate. Coming back to the price chart, and my last point on Hero MotoCorp is that these are the opportunities where the stock is coming down, and these are the points where people should try and accumulate the stock rather than buying at all-time highs of 4900, etc. Again, it is not a stock recommendation. I have given you some data points, I have given you the analysis, and it is absolutely your decision whether you want to invest in any of these stocks or not. Take this video as an educational purpose only, not a stock recommendation. Let's move to stock number 3, which is Infosys. Have a look at my screen and you will see that the stock was making an all-time high of around 1730 rupees per share at around February timeframe. It has now come down to around 1435 level, which is a correction of almost 17%. And more importantly, what that correction has done is, have a look at my screen, the PE ratio of Infosys right now is looking at around 22, while the industry PE is at 29. PB ratio is looking at around 6.73, while the industry PE is at 6.74. So from both the parameters, the valuation wise, it is looking undervalued right now. But the key problem that people cite with companies like Infosys is that these companies are not growing. For this, what we want to do is have a look at data, and what you will see that in fiscal year 2024, their total large deals, if you look at it, it stood at staggering 17.7 billion US dollars. Rahul, what does this number mean? You are just throwing a big number to us. Let me qualify this number from the statement that Salil, who is their CEO, made recently. As per the CEO, this is the highest ever large deal value in a financial year for Infosys. That is a big deal. FY24 has been the highest ever deal year for Infosys, which tells me that the company is going to grow in the next few quarters. But please understand one thing, with services companies like Infosys, it takes a lot of time for these deals to convert into revenues and profitability. It may take up to 8 quarters for these deals to start making some meaningful impact on the top line as well as bottom line. But then the question comes, why is the stock under pressure? Mainly because if you look at the 2024 results, you will see that 2024 has been a very average, or in fact below average year for Infosys. Have a look at my screen and you will see that the revenues have grown by only 1.9% and net profit has grown by only 6.2%. So this growth has been slowing down for the last year, and that is what potentially is causing this issue. And secondly, recently Infosys published the revenue guidance for 25, and what they're guiding is only 1 to 3% revenue growth. Again, that is very slow and investors are not liking it. But in my view, Infosys might do better than 1 to 3%, mainly because they recently acquired a German company, and one of the investors was asking this question to them, that you are outlining growth of 1 to 3% while this German company can add up to 1% revenues into your top line, to which their CEO said that they have not counted these numbers into the revenue guidance. So in my view, 1 to 3% looks very conservative, and it might be that Infosys may end up under promising and over delivering the results. And this may happen because if you look at my screen, you will see that their financial services business brings close to 26% of their revenues, and in March quarter it has degrown by close to 8.4%. And what is causing this degrowth? In my view, it has to do with the US Fed rates. because US Fed rate has been at around 5.25 to 5.50% and have not changed in the last 5 meetings. And US Fed rates have big impact in the discretionary spending when it comes to IT within the BFSI sector, which is the financial sector. And this is where Infosys revenues from BFSI segment are coming from the discretionary spending. Now it is likely that in fiscal year 2025, US Fed rate are going to be cut. I don't know whether there will be 2 cuts or 3 cuts, but it is likely to get cut. And if I look at this snippet here from Reuters, 100 economists are saying that the first cut is likely to be in September. And when the US Fed rates are cut, what is likely to happen is the discretionary spending in BFSI sector is going to go up. And in my view, that may give some boost to Infosys revenues and profitability. Now, stocks such as Infosys, REC or Hero MotoCorps, they may not give you 80% or 100% returns, but these stocks are pretty stable stocks and they bring hygiene factor into your overall portfolio. I hope you enjoyed this video. If you did, hit the like button. Let me know in the comments a simple thank you. I will see you in my next video. Until then, keep rocking.